The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut. Man, how you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Hi, folks. Basil Chapman sitting in for Darrell Martin. I usually do the Tiger Technicians Hour, 11 o'clock till 12 every day, every market day, that is, Monday through Friday. And it's my pleasure to be sitting in here for Darrell. And, of course, Darrell has a remarkable array of tools, uses the Nadex platform, and within it he's constructed a diagnostic box and does fabulous work. Now, he usually uses 10-minute charts. I'm going to try to do my best to show you some Chapman wave techniques. But first, I want a leftover question from my show a little earlier on, and was about Brent crude oil. I had the January contract up, and the big question is, was the low that was made at on the 14th at 4 o'clock at 76.79 some kind of a tradable low that maybe from here you can get a pretty decent bounce? And here's my answer. Within the context of this pattern that I'm looking at, which both resembles a rectangle formation and an arch formation, the low that was made at that particular point, I'll just type it in, 76.79, so I don't keep forgetting, it's 76. I like that. You got some symmetry there. 76.79 has made a peak A, B, C, and then it fails, starting another one. But the price has only come back on the 20th. That's yesterday. The price only came back. Today's the 20th. That's this morning at 6 o'clock in the morning. Only came back to 77.58. It did not go down to the 76.79 area. To me, that says that this is a critical formation. This is a 120-minute chart because the stochastic is bouncing nicely, maybe a little too quickly, and the price hasn't really achieved a level over the previous high that was made at 6 o'clock in the morning on the 18th at 79.93. But this is what I like very much. If you look at the way the technicals have been improving, as the price has been coming down, there is a slightly positive divergence. That says this is the area that should establish, I don't have it right now. I should have had my CD introducing the Chapman wave methodology because it shows this pattern. I'll try to do that during the break. So clearly, so what I'm looking at here is the monthly chart. Is just it hit the 200-period exponential moving average back in October of 2011 and went from 88.65. It went peak A, B. The Chapman wave, what you look for is the most identifiable low bar. This actually right here is a continuation of a previous pattern. I really should have put a down arrow there. The December contract actually gives me the information to say that that was a sell signal that went to sell mode. Hit the 200-period moving average and then went peak A, B, pulls back, another little AB there. So this is now an overlapping wave that says you should not only go to a C, but you should go to a D in the Chapman wave methodology. Lo and behold, it goes to a C and then a higher high. Each higher high gets graded. And this fourth highest high at 107.04 back in June of this year has the sharpest decline. It just plunges right from that level, the 100 and what I say, the 13, 14 area. It plunges down to the lowest low, which was made just the other day in the 77s. I would say that's a little bit of a decline. What is 60%? That's a humongous decline. But the MACD is showing no signs at all, or the stochastic in the monthly chart. The weekly chart has finally shown a little bit of the brakes being put on because the stochastic is making a slightly positive divergence, being higher here than it was earlier back in October, and the price is now quite sharply lower. That's the first sign. The MACD and stochastic are signals, but it's the way that black line, that 9-period exponential moving average in the weekly chart is pulling back. It's at 86.65. The price is at 78.77, 9 points lower, 8 points lower. So that's saying a lot of work needs to be done. Now let's pull out the daily chart. I did not have a chance to do the notations in the Chapman wave to the downside. What I will say is, the flatness of this is not that great, but it's saying that within 3 sessions, that includes this afternoon, we're at 1:15 Eastern Time, Friday, by Tuesday morning between 11 o'clock and 1 o'clock, I would suggest that if the BZF, the Brent crude oil January contract it's at 78.81. If it's trading above the resistance of 79.88 to 81.06, if it's able to climb above those moving average resistance levels, that would be a really, really good sign to say a bounce is taking place. And then what I would do is I would draw in this particular pattern here, and we'll see if it's going to work out. This is the first one right here. A little arch formation. Gosh, I hope I remember even to get my CD out. Let's just say that between here and tomorrow, there's a little bit of a consolidation, but it doesn't break down below today's low of 77.58. Then I'm anticipating that you've got something closer to a rectangle formation like that. Now let me just blow this up and move it to the side right here. This is the daily chart. Make it even bigger so you can see what I'm looking at. And then I suspect there could be a bigger rally. And that rally needs to take it nicely into that area right there. And if we can get that, it would be far better to start a move this afternoon to tomorrow morning to go there, so that I can start to consider that there's been one H pattern, and now you've got a much stronger cup that's forming. So I don't want to extend too long to the side, because to the side just makes a rectangle formation. It becomes this pattern right here. Some of you will recall this. I've been speaking about it for a year and a half. This particular pattern right here, it's called the lowercase h that becomes an M pattern. Look. The lowercase h that becomes an M pattern and breaks underneath the previous low bar, and within 2 bars you've got to get right back and start a pretty decent rally. Gold is trying to do that. I'll get to that in a moment. But in the meantime, let's get back to our talking about Brent crude, and I'll make it real clear. At any point, if I can remember the symbol ZBF15, I got to remember it's 2015 we're looking at. Do it again. It's BZ, not BZF15. If there's going to be a successful rally in Brent, you have to have momentum to the upside. You have to start making higher highs and higher lows, and it's got to survive the first big. It's done it already today, but this is really not big. I'm talking about a decent rally that takes it to the 81.5, 82.25. Then there's a pullback, but that pullback is just intraday. It's like 1 to 2 days maximum, and it shoots to a higher high. That would be the best thing. And then I'll say to you, now I can start looking at the high of the 10th of November at 85.46. But until then, that's a long way to go, and the real issue is, how does it treat the next few days? Is it just going to make that pattern you saw in the GLD of the H going to an M pattern? I'll even type it in right here. Look, H, like that, and then finally starts a rally attempt. Sometimes these H's can even get bigger, and that H becomes an M pattern. That's not what you want to see. That's just biding time before it goes to the next lower low. Okay, and we've had the most horrible winter so far. Well, just the start of winter, and actually, Brent. I'm not sure exactly where the Brent crude oil goes to, but you would think that somehow or other this is the time it should be used. All right, now let's go to a couple of 10-minute charts here. I'm going to put up on the left side. I'm putting up with Chapman wave tools that I like to use. These are standard tools that you can get anywhere. And I know that Darrell does a fabulous job of explaining different contracts, different position plays. He has just a wealth of information in terms of when reports are coming out that are designated specifically to the contract you're looking at, what times they are, how you can trade them, how you can put in straddles. You can do all sorts of things. Just wanted to quickly check to see if there were any questions, email questions. I think I've got to most of the questions. Yeah. Okay. Now what I'm looking at is if we go, this is a 120-minute chart, wrong chart. Get that out the way. Go back to this one here. I should mention that the Dow is up. It was down very sharply earlier in the morning, just like yesterday, and now it's up 11. S&P's up $1.69. Earlier on, in fact, the S&P was up about $4.50. So it's a very good action so far, considering that we are right at a point in my work that says this is the phase that we've got to watch and we've got to be very careful. Yes, you can have selective stocks on the long side, but this is also the period where I'm starting to consider putting on short positions. And so here we go, ESZ14, that is the 10-minute E-minis. And what you can see from this low bar, in this particular naked chart right here, let me just do this one first, and then I'll explain some other things. You came down. On the way down, I use lowercase, and we call them troughs. So this is trough A, trough B, trough C, trough D, trough E, trough F, and trough G. G is usually where you can get a pretty decent bounce. And that's exactly what happened. It turns around, the E-minis at 2,035.25, and there's a move that takes out all the resistance levels. That's really what you want to see. Powerful move, takes out the previous resistance levels. I'll just draw in a trend line right there to show what I'm talking about. And then what you want to see is that there's a 1-to-1 to the upside breakout, preferably going to the next most important peak. Well, what's the most important peak? That little candle right there at 2:20 a.m., where the price was at 2,046. This is the December E-mini contract. Well, it took it out, but a little later, it went to the first peak, and it gets an uppercase letter, and that's peak A. It pulls back, and then it goes on to leg B. And I like speed. Now, when I look at a chart like this, I say to myself, there must have been something like a MACD stochastic squash pattern that takes the price really quickly to an A, then a B, and then a C. And then the stochastic starts to pull back quite sharply, and the MACD's fast-moving average, it's really called the 9-period differential, I call it the fast-moving average, has to take over the momentum. That's the turbocharge. And it can only take it to a certain point. And what happens is, in this case, it goes to peak C, starts to fail, rallies, and then fails again just underneath. And I call that peak C1, C2. That's like D. That's like that fourth highest peak. Now you're pulling back, and I'll show you how it relates to the technicals that I'm looking at. I'll be right back. Basil Chapman sitting in for Darrell Martin. I usually have Tiger Technicians Hour and my opening call, my newsletter. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Whether or not we're going to get that leg D, but there is a what I call the phantom peak D, because it's that C1, C2. It at all the requisites, all the requirements, all the characteristics of what happens at a D, it just barely failed to make it. So it gives you a heads up to say, hey, I better watch this because it could come down a little sharper now because it has those characteristics of that fourth highest peak. Now, what I wanted to show is another chart formation. I'm going to relate this directly, questions that I've had for a couple of weeks now. Look, this leg right here in the gold contract, it happens to be a 10-minute chart, but I'm doing this without anything else. Just I happen to use candlesticks only because it's easier to see. I could use anything because I'm only looking at lows and highs. I don't care where the candles close. Don't care what kind of candles. Not for this particular purpose. You see this spiral in the gold contract from the low on the 19th at 10 to 11 in the morning a.m. From 1173.90. This is the gold, December gold. It goes up and it pulls back, retests successfully, and then it starts to move up. The white candles there, and it makes a little bit of a peak there. That is A. But the characteristic of this whole thing is what I call the single leg A up syndrome. Now, why do I call it the syndrome? Because there are enough times over a period of a month, over a year, or whatever, that you will find that news reports or the futures at 8:30 in the morning or the Fed speak at 2 o'clock on a Wednesday creates an either short covering or new buying or just a hands up saying, I've got to buy this. It's just the news is great. And there's a spiral to the upside. There are certain characteristics I look for that say that it's going to fail and come all the way back. And if it goes below 65, 70% of the move up, there's a good chance not only will it come back down further, but it could even test the low. It doesn't have to, but you've got to be real careful. You might use time going sideways, but there'll be a sudden push to the downside or drop to the downside. And look what happens. Gold goes up. It hits this round number 1200 high. Let me type that in because that's important round number. 1200 round number high. And then what does it do? It goes sideways because of that effort to go up. Everyone is optimistic, and then it starts a disappointing move down. This is not really the look that I call the Eiffel Tower, but it has a certain characteristic. And what does an Eiffel Tower look like? It looks like this, like an uppercase A. And what does that mean? It means that at some point, because you've gone straight up, you're going to come straight down, like inverted V, right? And look what it's done. It's gone up, and normally you don't get the sideways move. It just comes straight down. That is the term. That's the reason why I called it the single leg A up syndrome. In this case, it's almost like a single leg. There's just a minor little blip there for a peak A, and that becomes a B, but it really looks like an A, and it's come down. So where does it go to? Well, the support level. Look, this is cluster right here. Right. Let me grab this rectangle right here. There's this little cluster formation that says, wow, this should be the containment area. And what do we see? Not only does it treat it as a containment area support level, it dips a little bit below, but it doesn't go into the body of the candles over there. It instead just hits it and starts to move up, and then very slowly it goes peak A, B, C. Now, remember we were looking just a moment ago at the pattern of that H pattern? And I say there's a chance because it seems like so far what was I looking at? Brent oil was holding the right side low. Look what's happened here. It goes A, B, C. It comes back down, makes another little A, and then another little A, and then it re-triggers, it reactivates that C right there, because you really want to go to a D at least, and maybe even an E, and it goes D, spirals up to an E, and that is where it meets tremendous resistance from that area over there on the left side, and it pulls back, so I put a down arrow right there, deepest retracement, and now we've got an up arrow, because this looks like it's either a plus sign or an up arrow. I don't know with the technicals. I'm just guessing that this is an up arrow. And then it goes A again, A, B, and a double top. I've got to be careful here. This could turn out to be another arch formation. Hey, I'll be right back. We'll finish this analysis of the 10-minute gold chart without any technicals whatsoever. Be right back. Basil Chapman sitting in for the one and only Darrell Martin. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. We're looking at the 10-minute chart of gold and we're doing a chapter wave studies. We've got to an even pulling back. No technicals, just price. This is just the notation of the alphabet from A to G. And we've gone to an E, we've pulled back, and now we're starting fresh. A, B, we should get a higher high above 188.20, and whoops, there it is. That starts leg C. And what's our anticipation to go to leg D? It goes to leg D, the fourth highest peak, right there. And then what happens, there's something that I call the instant restart. Now we don't know if this is going to be an instant restart. I'll know more about the character of it in a moment. So this says that's an E/A, because it could be starting a brand new move, and then an F. But the way that it's moved, F/B, says to me, this straight up move here, this third buy mode says there's a chance that we might get quite a bit of a pullback from this peak F. I've got to be real careful. So that you were in positions, I'd be taking off one position and I'd probably put a stop somewhere under this bar here, a little bit, just kind of the breakout above D, so around about 191.46. And so I'm on a little bit of a caution move here. There's a move down, but it holds. There's a doji. Let's see what happens. And then it starts to make the pattern that I call, let me see if I can get this right now. Is this the one? Oh, boy, autoplay. So I'm not going to get that. I'll make that softer. There you are. So we've got autoplay. I'm going to go right here. I'm going to go right here. Right here. And I'm going to see this come up. I'm going to put in my code because this is the code. Of course, there's just too much going on probably. There it is. So that's, I put my code in there and it goes right into a mistake. Of course, if you do it too quickly and you're listening to the telephone, there it is. Here we go. And it comes up and it says, introducing the Chapman wave methodology. And I'm looking for, the pattern says the H pattern. This is chapter 17, and we're going to go right to chapter 17, and I'll show you what I'm looking for. This is the pattern. And this is from my CD book, Introducing the Chapman wave methodology, only available at TFNN. See, you come down, you keep coming down, you make these scallops, and you break the left side low bar, and you come down again, scallop, left side low, and then you make a bigger an arch formation, and that can turn into an M formation. That's number one. Number two is, let me get back to these things here. Right here. Let me get rid of this so that we don't freeze up. So now what we're looking at is that H formation. Is it a possibility that it's come? So now this looks, everything about it says this looks like a peak F top. So I'm going to leave it right there to say, well, let's move on a little bit. There it is. So it's going down. So that becomes a peak F top. That is this is the sixth highest peak, and that gets the down candle. Now I'm going to relate this to where we are in the stock market, number one, and I'm also going to relate it because I wanted to talk about that gold contract, that particular spike right there. Why am I making a big deal about it? I'll show you right now. This is the weekly chart. This is the weekly chart of the Dow. I could do the S&P, I could do the Qs, it doesn't matter. Do you see that there's here the same thing? There's this isolated, sudden, warping candle that goes right through a whole bunch of candles in this case, but it's still like a single leg A up. The big question is, in this market, are we about to get some kind of a single leg up? It could even have a little turn down and then one more move, but basically, are we making an arch formation or an uppercase A, like the letter A, and we're about to come down and break 17,280. That's the big question, because if you close underneath 17,200s, that 17,000 level is going to be really important. To close below 17,000 on a weekly basis says you're in for a timeout. Be very, very careful. So I want you to rate. Patterns repeat over and over again. They repeat in all time frames, and I did this without any technicals at all. But in this particular instance, I wanted to show you that there were concomitant patterns that repeat over and over. And here's the same thing again with the technicals. Look, here's where was that big spike up? Right there. See, there's that big spike. Look at the MACD spiking like that. Stochastic didn't really get above 80%. It was really in a failure mode. That's the green and red lines there, the slow stochastic. And this is the MACD, the moving average convergence divergence. And because the fast moving average held so well, it kept trying to go back to the new heights, but it couldn't do that because the stochastic, which is your torque, didn't give you enough energy to the upside. Then it failed. And now it's got a very steady move up, and that's why you got that peak A, B, C, D, E, pulls back and even goes to an F in the next one. So I wanted to show a couple of patterns. Question in the den, how would you rate Bubba's 10-minute chart? 10-minute chart, let's just do that. B-A-B-A. Yeah, there it is. Now, Darrell uses a bunch of moving averages. He uses a whole slew of particular technical indicators, and he's developed really a very fine program and a way of looking at the markets. I love to just use moving average that I've looked at for years and years and years. You see this brownie one right here? That brown one is the 200-period exponential moving average. Did I even care about it? Right now, we're looking at Alibaba 10-minute chart. It's trading at 111.41 up 258. Well, look, it had a move up, and then it went sideways, and it broke down. Then it has a move up, and it moves sideways. It's a better move so far because it's gone to the 200-period moving average. Only when it got to that level right there did I suddenly put my eye like it was a gap or a candle or a particular pattern that I'm looking at as an attractor. This becomes a magnet line. So right now, for Alibaba, BABA, it is both a magnet line and a repellent line. And as soon as Alibaba, which I think will happen maybe by tomorrow, starts to trade at 112.60, it's starting to turn this into a major support area, and that upper part will become the propellant if it's going to fulfill. This is a peak A, fails, does an A minus because it fails, pulls back, starts a new one, A. This time it goes to a B, and it pulls back. It's even made a little A to B over there. But it needs to get to a C, and it's in a, this is really what you call a perfect stair-step move. So as a stair-step move, what's the question? Basil, on any retracement mode, the Chapman wave does not always complete, but when it breaks a high, the wave usually completes, correct? Yes. Okay. Now, here it is, the naked chart. What can we do? We can just grab this and say, hey, this looks like one of those traditional flag patterns. And what I do in a flag pattern is I immediately say, in a shorter time frame, let's grab the 2-minute chart and do BABA. In a 2-minute chart, you should be able to get an A, peak A, a peak B, then a peak C, and a peak D, except if it starts to form the pattern that goes H to an M pattern. You remember that's the one we were just looking at, an H, lowercase h, to a lowercase m. So in this particular instance, what am I looking at? I'm looking at this sideways move saying, if Alibaba breaks 111.15, let's call it 111 just for round numbers. You've got to be careful, because that green line, which is the 200-period moving average in the 2-minute chart, becomes a target of 110.68. But if, in fact, right now, it starts a move that takes it over 111.55 to 111.56, that starts another leg B. That's the one that's going to challenge the top at 111.75. But we're looking also at the market, and the market is trying its best to move higher. So the question is, J&J asks, Basil, how would you rate Baba's 10-minute? Okay, that's a 10-minute chart. Yeah, so that's what I've just discussed. The rectangle is formidable. Why? Rectangles can last a lot longer than your patience. That's my expression. And what happens is that very often it gets to the bottom and you think it's going to break down. Instead, that's where it turns around and just goes back up. It gets to the top, so you say, oh, it's going to break out. Great. Nope. What happens is that's where it turns around. It's like a little, you know, like one of those little fish in a tank. It just goes from the one side, doesn't even know that it's a glass that it's going to bumps into the glass and turns around. Hey, let's go to Brent. Oh, whoa, my engineer's got the print couldn't get even bigger. Brent in Martinez, California. Brent, how are you? Sorry to keep you waiting.
Not a problem, Basil. How are you today?
I'm well. Boy, my engineer started off with small lettering, then he went bigger and bigger. I think he must have hit 58 pica, they used to call it. Yes, you'd like to look at?
I was calling about two different stocks. We've talked about the one already. Just because of they're kind of on either end of the spectrum. Baidu is broken below its 9 EMA.
Right.
But the one I'm calling about in particular is Nugget.
Okay, so
went
Nugget.
Down and, I was going to say it went down and kissed its 9 EMA yesterday. I bought it there around 14. I just wanted your opinion on that.
Okay, folks, we're looking at NUGT. This is the direction daily gold miners 3 times BL. BL, I don't know what BL stands for. And let me go to it here, NUGT. So what we're looking at here, this is the monthly chart. This is the weekly chart, just trying for a turnaround here. And now we've got the daily chart, which I'm going to move right across here so we can talk about it, because we really want to look at the daily and the 120-minute chart together. So let me grab, this is the 120-minute chart. Okay, so I haven't got any notation. If you don't mind, I believe I might have the GLD all notated. It's, yeah, I got it somewhat notated. Let me use the GLD because that's your root, and the Nugget is a derivative of the root. So they have almost exactly. I think Nugget trades actually now after that initial opening bout some years back. Now it trades very much in concert with the GLD. And I'm going to do this.
Can I say something real quick, Basil?
Yes.
Yeah, I think it's actually more tied to the GDX, but I'm sure you could use the GLD because it's more the miners themselves.
Yeah, you know what? As I was saying that, I'm saying to myself, I got a feeling I just said the wrong. Thanks for correcting me. I just, you're right. So the GDX is the gold miners, the market vectors gold miners ETF, and it's gone A, B, C, D, pulls back, and it's gone A, B, C, D. Unbelievable. How many hundreds and hundreds of thousands have I done of this, and my eyes just pop right out when I see how many times they really do go to a D, the fourth highest peak, then pull back, and we've got that exact same thing. So now, do you have a position in this?
Yes, like I said, I bought it yesterday. There was that pullback in the GDX and obviously the Nugget likewise because it's tied to that. And at least on the daily charts I looked at, it seemed like the 90 EMA was around 14. That's why I bought it. So.
Okay, so what we're looking at, folks, is that there's a peak D in the second peak D in the GDX, trading at 19.62, up 42 cents. The market vectors gold miners ETF 120-minute chart. You remember I was talking about the 200-period moving average just a short while ago, how it's so important that if you do get there, it becomes a magnet, it becomes a repellent, and then a propellant, and very often you get a sine waves move, a sine, S-I-N-E, wave move, up and down and up and down. So look at this. It's gone up to D. It's gone below it, almost a 1-to-1 to the downside. Now it's trying to come back to the 1983 level. So that's the 120-minute chart. Nice action considering this is peak C, because what should happen, coming off a bottom, if it goes to a D in the daily chart, not only will that help the weekly chart, but it's using up precious time, because time has been the most critical thing on the downside for anything to do with the gold contracts, the stocks, whatever it is. Most of the time, you went to this flat move to the side, as it did back in October into November, into the late October, and then it broke down, almost like that H pattern that goes to a lowercase m pattern, or you can think of it as a rectangle surrounding that candle right there. And now what we've done is we've produced a cup formation, and if by Monday, if without taking out 1907, which is key support, shorter term for the GDX daily, if this can go to a D above 20.38. Now, for technical purposes, I very often say, all I want is to go to D. You don't have to close there. You don't want anything. I just want to see the spike to that level. And then if it pulls back, that's fine. In this case, I don't want any pullbacks that are just not anything more than intraday or one day like yesterday at the most. Why? Because if gold is going to have a move to the upside, and I include this is gold as well as the gold miners, because we're looking at something that's a little different. There, in my opening call, we've got a gold stock because I wanted it right at this particular point. I wanted a panoply. I wanted a diverse portfolio. Is it going to work? We won't know, but that's what I wanted. So let me do this. I want to show the relationship of where the dollar is right now to where the GDX is in gold. So, Brent, can you hold on?
Absolutely. Thanks, Basil.
We've got Brent holding on, and the Dow's up 17, S&P's up 2 3/4, and the GDX is up 46 cents. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this shares and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
And he comes up with such novel concepts. He's our high-tech genius. He's the one that puts things together into context, gives you facts and details that you wouldn't hear anywhere else. So please listen to David. Coming up next, looking at the dollar right now, we've got Benton Martinez, California, looking at Nugget. And now I said, I want you to do the relationship of the dollar as it stands. Now, these rectangle formations are all over the show. Look at this. Here's a rectangle formation in the dollar. If the dollar takes out 87.40, 87.27 is the 200-period moving average in the 120-minute chart. It better hold that, because if it takes that out, it'll test the low of the 16th of November at 87.18. At that point, if the dollar goes into the 86s, there's no question that gold, and I'm just for the moment going to go to the GZ contract just to show you something. Gold, which has also been in this kind of sideways trading band, will quickly move to the 15, 12, 20s. That's my opinion anyway. But most importantly, what I'm thinking is that your nugget, if ever there was an opportunity to be in nugget right now with a reasonable risk reward, let's put it this way, with a reasonable risk but a really good reward, this is the moment. But be careful, because these sideways moves, I've just shown that look at crude oil. I mean, talk about a sideways move. When patterns occur, they often repeat over and over and over again. Look at crude oil. It's ready for a bit of a bounce. But if you look at crude oil in a monthly chart, you'll see that it is just stuck in a range. So the commodities generally are in bear markets. They've been in bear markets. How they bounce here is going to be very important. I'm going to put gold in that category because if you're looking at the chance of a bounce, everything about the monthly chart says this is the time. Because if it doesn't do it now, it is going right back. Gold is going right down to the 1086 level back from February of 2010. So I think that you've got the best opportunity right now to be in it. You know your risk reward, but I think it's the reward that's going to be important. But you need to see gold go above 1208 next week and start holding that 9-period moving average in the weekly chart. That'll be very positive. Hope that helps you.
It does, Basil. You have yourself a great weekend. I'm heading out with my wife for our 26th wedding anniversary. So.
Oh, fabulous.
All right.
That's what the 26 is like. Oh, boy. That's great. Have a wonderful time. So,
all right. I appreciate it, Basil. You take care. I'll talk to you soon.
Thank you very much. So I've written down a bunch of things that I wanted to do. I probably am not going to be able to do it. Let me just do this real quickly. I don't know if Darrell looks at wheat, but wheat has had a very nice move. It's made that single leg up to a peak G. Now it's pulling back. It's really important. If it pulls back to 528, that's a problem. It needs to hold here and go quickly to 551. If you're looking at soy, this is the continuous contract. Same thing, peak D right at the 200-period moving average. So, folks, if you enjoyed what I'm looking at here, at least the way I look at things using the Chapman Wave methodology, tune into my show 11 o'clock till noon every single market day. And let's face it, it's fun to look at all these different contracts, look at the different methodologies, and see what can happen. Meantime, back at the ranch, let me just say that in terms of the market, the Dow it's really important, coming back nicely. It's up 14. This is a very important moment in the Chapman Wave methodology. I'm suspecting that we're going to make one or even two slightly higher highs, and sometime next week we will start to see a really strong down candle. What that does is going to be very important. And what's the volatility index? I'll talk more about it tomorrow in Technical Friday in the Chapman Wave. Thank you for being here, sitting in for Darrell Martin. Have a great day. I'll be back with Tom later today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.